Sell Your Rentals, Sell Rentals, Selling Your Rentals, a comprehensive guide. To generate questions, provide a topic you'd like to focus on, such as marketing strategies for rental property sales, maximizing rental property value, or legal considerations when selling rentals. Your chosen topic will help tailor the questions to your specific needs. Sell Your Rentals. Sell Rentals. Key highlights. 1. Understanding capital gains taxes on rental properties is crucial for real estate investors. 2. Strategies to minimize capital gains taxes include taking advantage of tax breaks and understanding the tax code. 3. Selling rentals can impact your monthly income, so it's important to analyze the financial implications. 4. Exploring alternative income sources, such as real estate investing, can help offset the loss of rental income. 5. Reinvesting your sales proceeds wisely is essential for long-term financial growth. 6. Timing your sale is important and can be influenced by factors such as the housing market and property appreciation. 7. Preparing your rental for sale involves necessary repairs, staging, and professional photography. 8. Navigating the sale process requires choosing the right real estate agent and understanding the closing process and costs. 9. Legal and tax considerations include options like the 1031 exchange to defer capital gains taxes and fulfilling legal obligations towards tenants during the sale process. 10. FAQs. How can I sell my rental property without paying capital gains tax? Introduction. Selling rental properties can be a significant financial decision for real estate investors. Whether you're looking to cash in on the high market prices or simply want to divest your portfolio, it's essential to understand the process and implications of selling your rentals. This comprehensive guide will provide you with insights into key aspects such as capital gains taxes, the impact on your monthly income, reinvesting sales proceeds, timing your sale, preparing your rental for sale, navigating the sale process, and legal and tax considerations. However, it's important to note that selling property isn't cheap, and you must also factor in costs such as legal fees, closing costs, commission, and hefty capital gains taxes. Ultimately, selling your rental property makes the most financial sense when you plan on using the profits to invest in a stronger opportunity or to diversify your portfolio. If you are considering parting ways with your rental property, here are the signs it might be time. Understanding capital gains taxes on rental properties. One of the most critical aspects of selling rental properties is understanding capital gains taxes. Unlike selling your primary residence, real estate investors are subject to specific tax rules when it comes to rental properties. Capital gains tax is a tax levied on the profit made from the sale of an asset, which includes rental properties. The profit is calculated by subtracting the selling price from the purchase price, taking into account any expenses such as property taxes. This profit is considered taxable income and must be reported to the Internal Revenue Service, IRS. For those looking to minimize their capital gains taxes, selling rental properties in high-tax states in exchange for a similar property in a more landlord-friendly state is a common practice among rental property investors. When selling a rental property, the taxable income from the capital gain can significantly impact your tax bill. The amount of tax you owe depends on factors such as the length of time you've owned the property and your taxable income. If you've owned the property for less than a year, the profits will be considered short-term capital gains, which are taxed at the same rate as your regular income. However, if you've owned the property for more than a year, the gains are considered long-term capital gains and are taxed at a lower rate. It's important to consult with a tax professional to understand the specific tax implications of selling your rental property. They can help you navigate the tax code and identify any potential tax breaks or strategies to minimize capital gains taxes. The basics of capital gains tax. When selling rentals. When selling a rental property, the basic principle of capital gains tax is to calculate the profit you've made from the sale of the property. This profit, also known as the capital gain, is determined by subtracting the selling price of the property from the purchase price. The resulting amount is considered taxable income. It's important to keep detailed records of your purchase price, any improvements or renovations made to the property, and the selling price. This will help you accurately calculate your capital gains and determine your taxable income. Consulting with a tax professional can provide further guidance on calculating capital gains, tax, and any deductions or exemptions you may be eligible for. Strategies to minimize capital gains taxes. While capital gains taxes are inevitable when selling rental properties, there are strategies you can employ to minimize the amount of tax you owe. By taking advantage of tax breaks and understanding the tax code, you can potentially reduce your tax bill. Here are some strategies to consider. 1. Utilize tax breaks. Familiarize yourself with the tax breaks available to real estate investors, such as deductions for expenses related to the property, depreciation, and property management fees. 2. Time your sale strategically. Consider selling your rental property during a time when the real estate market is strong, as this can potentially increase the selling price and offset capital gains taxes. 3. Explore 1031 exchanges. A 1031 exchange allows you to defer capital gains taxes by reinvesting the proceeds from the sale into a like-kind property. 3. This strategy can be beneficial for long-term investors looking to continue growing their real estate portfolio. 4. Stay informed about changes in the tax code. The tax code is subject to changes over time, so it's important to stay updated on any new regulations or deductions that may benefit real estate investors. 4. Consulting with a tax professional can help ensure you're taking advantage of all available tax-saving strategies. By implementing these strategies, you can mitigate the impact of capital gains taxes and potentially maximize your profits from selling rental properties. The impact of selling rentals on your monthly income. Selling rentals can have a significant impact on your monthly income as a real estate investor. By selling a rental property, you're relinquishing the steady rental income that contributes to your cash flow. It's essential to carefully analyze the financial implications of losing rental income, including the potential loss of passive rental income, and consider alternative income sources to offset the loss. Analyzing the financial implications of losing rental income. Losing rental income can have a direct impact on your cash flow and overall financial situation as a real estate investor. Rental income provides a consistent source of passive income, which helps cover expenses and contribute to your overall financial goals. When selling a rental property, it's crucial to analyze the financial implications of losing this rental income. Consider factors such as the amount of income generated from the property, the stability of the rental market, and any potential vacancy periods between tenants. This analysis will help you assess how losing rental income will affect your cash flow and make informed decisions about selling your rentals. Additionally, it's important to explore alternative income sources to offset the loss of rental income. Real estate investing offers various opportunities for generating passive income, such as investing in other rental properties or diversifying your investment portfolio. By carefully evaluating your options and considering the potential returns and risks, making a smart move to mitigate the impact of losing rental income is crucial. Alternative income sources to consider. When selling rentals and losing rental income, it's essential to explore alternative income sources to maintain financial stability. Real estate investing offers various opportunities for generating passive income. Here are some alternative income sources to consider. 1. Invest in other rental properties. By reallocating the sales proceeds into new investment properties, you can continue to generate rental income and maintain cash flow. 2. Diversify your investment portfolio. Consider exploring other investment avenues such as stocks, bonds, or mutual funds to diversify your income sources and potentially generate passive income. 3. Explore real estate crowdfunding. Real estate crowdfunding platforms allow you to invest in real estate projects alongside other investors, providing an opportunity to earn passive income without the responsibilities of property management. 4. Rental property management. If you no longer want the responsibilities of being a landlord, you can explore property management services. 4. This allows you to earn passive income from rental properties while professionals handle the day-to-day management tasks. By considering these alternative income sources, you can mitigate the impact of losing rental income and continue to generate passive income as a real estate investor. Reinvesting your sales proceeds wisely. Reinvesting your sales proceeds wisely is crucial for long-term financial growth as a real estate investor. By carefully allocating the funds from your rental property sale, you can maximize returns and diversify your investment portfolio. Options beyond savings and money markets. When reinvesting your sales proceeds, it's important to consider options beyond traditional savings accounts and money markets. While these options provide stability and liquidity, they may not offer the same potential for long-term growth. Real estate investment can be a viable option for reinvesting your sales proceeds, providing opportunities for capital appreciation and passive income. Consider factors such as market conditions, interest rates, and the potential for rental income when evaluating real estate investment opportunities. By conducting thorough market research and consulting with real estate professionals, selling your current rental property may be the best option for reinvesting your sales proceeds and potentially achieving long-term financial growth. Assessing the risks and returns of different investment avenues. When reinvesting your sales proceeds, it's crucial to assess the risks and returns of different investment avenues. Each investment option comes with its own set of risks and potential returns, and it's important to evaluate these factors to make informed decisions. Here's a comparison of some common investment avenues. By assessing the risks and returns of different investment avenues, you can make informed decisions about how to reinvest your sales proceeds and achieve your long-term financial goals. Timing your sale. When is the right moment? Timing your sale is crucial when selling rental properties. By carefully considering market conditions and property appreciation, you can maximize your selling price and potentially offset capital gains taxes. Identifying a strong seller's market. Identifying a strong seller's market is key to timing your sale effectively. A seller's market is characterized by high demand, low inventory, and rising home prices, including rental prices. In such a market, sellers have the advantage of attracting multiple offers and potentially selling their properties at a higher price. Monitoring the housing market and understanding market values in your area can help you identify the right time to sell your rental properties. Consider factors such as low housing inventory, increasing property values, and favorable market conditions when making your decision. Evaluating your property's appreciation. Evaluating your property's appreciation is crucial when timing your sale. Property appreciation refers to the increase in value over time, which can significantly impact your selling price and potential profit. It may be a good time to sell when the market is experiencing high demand. Rents have stagnated or decreased, and your property has substantially increased in value compared to its initial purchase price. It's important to compare the current market value of your property to the purchase price and assess the appreciation rate. Monitoring market conditions and understanding the factors that drive property values in your area can help you determine if your property has appreciated enough to maximize your return on investment. By evaluating your property's appreciation, you can make informed decisions about the right time to sell and potentially capitalize on market growth. Preparing your rental for sale. Preparing your rental for sale is essential to attract potential buyers and maximize your selling price. By focusing on necessary repairs, staging, and professional photography, you can present your property in the best light and increase its appeal to potential buyers. Necessary repairs and upgrades for maximum ROI. Before listing your rental property for sale, it's important to address necessary repairs and upgrades to maximize your return on investment. Consider conducting a thorough inspection of the property to identify any issues that may deter buyers or affect the property's value. Focus on repairs that offer a high return on investment in the short term, such as fixing plumbing or electrical issues, repairing damaged floors or walls, and replacing outdated fixtures. Additionally, consider making aesthetic upgrades, such as fresh paint, updated lighting, and landscaping improvements to enhance the property's appeal. By addressing necessary repairs and upgrades, you can increase your property's value and attract potential buyers. The importance of staging and professional photography. Staging your rental property and investing in professional photography can significantly impact its appeal to potential buyers. Home staging involves arranging furniture, decor, and accessories to showcase the property's best features and create a welcoming atmosphere. Professional photography captures the property's highlights and allows potential buyers to visualize themselves living in the space. Both staging and professional photography can help your rental property stand out in a competitive real estate market, attract more potential buyers, and increase your chances of selling at a higher price. By investing in staging and professional photography and connecting with an experienced real estate agent, you can make a positive first impression and increase the overall marketability of your rental property. Navigating the sale process. Navigating the sale process requires careful consideration and attention to detail. By choosing the right cash home buyers and understanding the closing process and costs, you can ensure a smooth and successful sale. Choosing the right cash home buyers. When choosing the right cash home buyers for your rental property, it's essential to research and vet potential buyers to ensure a smooth and trustworthy transaction. Look for reputable buyers with a history of reliable purchases and satisfied clients. Transparency in communication and a clear understanding of your needs are crucial when selecting cash home buyers. By partnering with a reputable buyer, you can streamline the selling process and secure a fair price for your rental property. Choosing the right cash home buying company is essential for a successful rental property sale. Look for a cash home buyer who has experience working with investment properties and understands the intricacies of the real estate market. They should have a strong network of potential investor buyers and understand how to market your property effectively. Additionally, consider their knowledge of property management and their ability to handle any challenges that may arise during the sale process, including dealing with bad tenants. By selecting an investor-savvy real estate cash home buyer, you can ensure that your rental property sale is handled professionally and efficiently. Understanding the closing process and costs. Understanding the closing process and costs is crucial when selling your rental property. The closing process involves finalizing the sale and transferring ownership to the buyer. It typically includes steps such as title searches, inspections, appraisals, and the preparation of legal documents. It's important to work with a real estate attorney who can guide you through the closing process and ensure that all necessary paperwork is completed accurately. Additionally, be aware of the closing costs associated with the sale, including the sale price of your rental property, which may include attorney fees, title insurance, transfer taxes, and real estate commissions. By understanding the closing process and costs, you can be prepared for the financial aspects of selling your rental property. Legal and tax considerations. Legal and tax considerations are essential when selling rental properties. Understanding the 1031 exchange and fulfilling legal obligations towards tenants can help you navigate the sale process effectively. The 1031 exchange defer capital gains taxes. The 1031 exchange is a valuable tool for real estate investors looking to defer capital gains taxes. This strategy allows you to sell your rental property and reinvest the proceeds into a like-kind property without paying immediate taxes on the capital gains. By utilizing a 1031 exchange, you can defer the tax liability and potentially continue growing your real estate portfolio without being burdened by capital gain taxes. However, it's important to comply with the specific rules and timelines set by the IRS to successfully execute a 1031 exchange.